Welcome, day traders. Yesterday, Wall Street saw a new wave of a sell-off. Apart from shares, risk assets also faced bearish pressure. Major central banks have to raise their key rates aggressively to rein in a soaring inflation. Given that bears are taking the upper hand, it may signal that a recession may start soon. Asian markets are also in the red today due to pessimism in the US stock market. Traders are worried that aggressive monetary tightening by leading central banks, especially the Fed Reserve, may trigger an economic downturn. Market concerns were also fueled by the statements of the Fed as well. Last week, the Federal Reserve Bank of Atlanta said that the US economy may already be in a recession. Another recession signal is the fall in the 10-year bond yield. Although the US yield curve has briefly sunk by 1 basis point, analysts assume that such an important indicator of a recession is far enough for the inversion, the line located at 105 basis points. However, the 10-year bond yield continues to decline. In the first week of July, it's already dropped to the lows of early June. So the question is whether a consecutive decline in the 2 quarters may be considered a recession or not. Meanwhile, the US dollar index is taking advantage of the situation. Forex is booming, boosting the US currency to the highs of 2002. US traders returned to the market after a long weekend and decided to revise their portfolios in favor of safe haven assets. Moreover, last week the Fed reinforced expectations of a further policy tightening and another 75 basis point rate hike in July. Apart from being a safe haven asset, the greenback managed to advance amid strong data on factory orders. The figure amounted to 1.6%, significantly exceeding the forecast reading of 0.5%. The US dollar index maintained its bull run yesterday. In the Asian session, its price jumped above 106.44, approaching a 2-decade high. Today, it's likely to stay in the downward range of 106.36 and 106.66 ahead of the FOMC meeting minutes. The yen also added gains thanks to risk aversion. Despite being the weakest currency, it managed to slightly rise today versus the greenback. In the Asian trade, the dollar-yen pair tested 135.11. After that, it grew to 135.29. Nevertheless, its upward movement is quite feeble. It has changed several times during the Asian session from upward to downward. It appears traders remain cautious, closely monitoring its movement. However, the upward trend prevails today. The yen is trading in the bearish price corridor of 135.00 and 135.90. The Australian stock market is also trading with the risk of sentiment. However, there are some differences, albeit temporary. For example, the key rate. Yesterday, the Reserve Bank of Australia hiked it by 50 basis points. At the same time, inflation in the country is high, but it's still lower compared to other countries. The Australian economy also looks quite resilient. The Aussie climbed higher amid the consolidation of the US dollar. During the Asian session, the Aussie was slowly but surely moving up. It was largely trading in the upward range of 0.6778 and 0.6823. If it hits 0.6765, it will confirm the negative forecast. As a result, the pair may test the support level of 0.67. At the time of preparing material for this video, the AUD USD pair was trading at 0.6810. The working definition of a recession is a significant decline in a country's GDP. However, economists believe that the situation is a bit different now. For example, one of the important indicators of an economic downturn may also be a sharp drop in new jobs. This is why traders are waiting with a bated breath for the non-farm payrolls report. This data will either intensify or ease recession fears. Investors are already casting doubts on the likelihood of a soft landing. This fact, as well as the above-mentioned ones, are warning of the market sentiment. For this reason, it's crucial to keep your finger on the pulse, subscribe to our channel, and stay up to date with the latest market news. See you soon.